Hello and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. Coming up on the show today, IMF chief worried about middle-income countries, urges expanded definition of vulnerable. World Bank to address poor countries' debt overhang. And Kenya and UK agree to form COVID-19 team on travel restrictions. We begin the show with intraday market numbers, and here in Africa, all the major markets we track were positive. Nigeria's main index was marginally higher by 0.07%, while the JSE index jumped the most by 0.73%. The market in Kenya ended Wednesday's session negative. It was a similar picture in the Gulf region, where major markets were mostly positive at intraday. Only the market in Saudi Arabia declined by 0.14%. The Qatari index rose 0.41% at intraday. In the UAE, Dubai's main index jumped 0.92%, while the Abu Dhabi index advanced 0.43%. And in Europe, stocks climbed today, tracking gains overnight in the Asia-Pacific markets following a rise in the U.S. stock futures. Well, let's talk to Chelsea now from the floor of the Frankfurt Stock Exchange. Hello, Chelsea. Good afternoon. Well, let's take a look at stocks in Europe after U.S. indices closed at records a day ago. This morning, there was new data on Germany's industrial sector. Is business still surging for factories?
Well, the German industrial sector continues to really support the entire economy here. And we've seen this emerging over the course of the pandemic, where industrial parts of the economy, so factories, manufacturers, continue to do really well. And that's while much of the rest of the economy, the services side, the restaurants, the bars, the retail, is still getting hit. So the latest data on the German manufacturing sector continues to show that trend. In February, Germany saw factory orders continue to rise much better than expected. But we also have seen data today, for example, from BMW, one of the largest car makers here in Europe, showing a record growth in sales for the first quarter of this year. That's in part due to Asia. The exports to Asia, including to China, have been doing very well. So this continues to support the European economy, but it hasn't had much of an impact on stocks today. Here in Frankfurt, the DAX is up just about 0.1%.
And the European medicines regulator says that blood clots should be listed as a side effect of the AstraZeneca vaccine after an investigation found a link between the shot and, of course, blood clot. How have European countries responded to that?
Well, what we've seen since the European Medicines Agency made that announcement yesterday is really European states starting to splinter around what to do next. So the EMA, the medicines regulator, said that there is a clear link between the shot and the rare blood clots that we're seeing, but it doesn't mean that states really should stop using it entirely, because the risks of the coronavirus, they think, are still higher than the risks of developing these rare blood clots. So it's really up to each European country to decide whether they want to keep using this shot, whether they want to restrict the ages that are able to get it. Here in Germany, for example, only people above the age of 60 are allowed to get this shot at this point. We've seen France and Italy following suit, but other countries here in Europe are continuing to use the AstraZeneca vaccine for all ages. So we're really seeing a divergent response, and the EU had hoped to come up with a unified response, but they weren't able to after several hours of press conferences yesterday. So what we're seeing is really a very confusing and patchwork set of rules once again in the EU's vaccination effort.
Meanwhile, Germany is warming up to Russia's coronavirus vaccine. German politicians have in recent days said they're interested in buying the Russian Sputnik shot. Tell us more about this.
So this has been a big question here in Europe as we see so many problems with the EU's vaccination effort, especially with the problems coming from the AstraZeneca shot, whether the EU would look to Russia and its Sputnik vaccine to help sort of overcome some of these production shortfalls, some of these other issues with vaccines that are here in Europe. It does seem that the EU is now starting to take those steps. Today we heard from the health minister here in Germany that they do plan to hold discussions with Russia over the shot. The Sputnik vaccine hasn't yet been approved here in Europe, so it's too early to say that EU countries, including Germany, are now going to start using it. But all we've heard from Germany is that if it is approved by the EU vaccine regulator, that they will start to use it. So this, of course, comes as there's an immense amount of pressure on countries in Europe to find new vaccines, to find enough supply to vaccinate the population because of the production shortfalls we've seen with AstraZeneca, and now because of the skepticism surrounding that vaccine. So EU countries are really looking everywhere they can for more vaccines, and Russia is a key potential supplier for the bloc.
All right, thank you very much, Chelsea, for updating us on those. Enjoy the rest of the day. And stocks in Asia Pacific mostly rose today after the S&P 500 notched higher to a record closing high overnight. Hong Kong's Hang Seng Index led gains among the region's major markets, rising 1.16% to close at 29,008.07. Shares in Australia closed higher as the S&P ASX 200 gained 1.02% to 6,998 points. Mainland Chinese markets notched higher on the day. The Shanghai Composite rose fractionally to 3,482 points, while the Shenzhen component advanced slightly to 13,989 points. Elsewhere, the Nikkei 225 in Japan slipped less than 0.1% to close at 29,708 points, while the Topix Index finished its trading day 0.79% lower at 1,951 points. South Korea's Kospi closed 0.19% higher at 3,143 points. And futures contracts tied to the major U.S. stock indices ticked modestly higher in early morning trade today, suggesting that Wall Street could extend gains that have propelled the S&P 500 to record levels this week. Futures tied to the Dow Jones Industrial Average rose 31 points. S&P 500 futures and Nasdaq 100 futures also both traded in positive territory. The moves in extended trading came after a late-day pop in the S&P 500, pushed it to 4,079 points, a new closing high. Away from the equities there and looking into the oil market, prices fell in early trade today after official data showed a big increase in U.S. gasoline stocks, sparking concerns about demand weakening in the world's biggest oil consumer as crude supplies around the world rise. Brent crude fell 0.8% to $62.65 a barrel, with U.S. oil falling 0.9% to $59.24 a barrel. The U.S. Department of Energy says while crude oil stocks in the United States fell more than forecast by analysts, gasoline inventories jumped sharply, also against expectations. Oil inventories dropped by 3.5 million barrels last week to nearly 502 million barrels, and gasoline stocks increased by 4 million barrels against expectations of a decline to just over 230 million barrels. Refiners ramped up production before the summer driving season. And in metals now, gold prices steadied after early falls today as market participants weighed the U.S. Federal Reserve's commitment to keep interest rates low for some time against likely higher inflation. Spot gold was flat at $1,737 per ounce, while U.S. gold futures fell 0.1% to $1,739 per ounce. Among other metals, silver fell 0.1% to $25.09 per ounce, and palladium was down 0.3% to $2,614, while platinum rose 0.6% to $1,232. Away from the markets, the managing director of the International Monetary Fund, Kristalina Georgieva, says she is concerned about tourism-dependent and other middle-income countries that had weaker fundamentals and high debt levels before the pandemic and is backing the adoption of a broader definition of what makes a country vulnerable. Ms. Georgieva adds that she will discuss with IMF members whether they back offering low and no interest financing to middle-income countries hit hard by the pandemic, not just the poorest countries. The IMF's Poverty Reduction and Growth Trust can currently only lend to the poorest countries, which limits the ability of developing countries with higher income levels to get low or zero interest loans from the IMF. And the president of the World Bank Group, David Malpass, says the group is working actively in collaboration with the International Monetary Fund on the common framework that the G20 established for dealing with debt overhang and debt burdens. While stressing the relevance of transparency, Mr. Malpass urged all G20 countries to disclose the terms of their financing contracts, including reschedulings, and to support the World Bank's efforts to reconcile borrowers' debt data more fully with that of creditors. The World Bank president also asked all G20 countries to create incentives for all their public bilateral creditors to participate in debt relief efforts, including national policy banks. And Kenya and the United Kingdom have set up a joint emergency committee to address COVID-19 travel restrictions after London added Nairobi to its COVID-19 travel red list. Britain sparked a diplomatic row on April the 2nd when it included Kenya in the COVID-19 travel ban red list effective Friday, April the 9th. The decision was taken by UK ministers following a review of the latest scientific evidence pertaining to the risk of community transmission of COVID-19 variants, showing nearly a third of about 550 people who travel from Kenya to the UK each week have been testing positive to the COVID-19 variant originating from South Africa. All right, we look now at the South African economy, where the month of April has not begun well for many South African citizens, as they have witnessed significant hikes in both fuel and electricity prices. Energy expert Chris Yeland reflects on the 15% electricity price increase, and while the price of fuel has also increased over the first 4 months of the year, and how much this will have on consumers and the economy. Let's take a listen.
Price is affected by two things: the US dollar price of oil, as well as the US dollar to rand rate of exchange. And with the price in US dollars going up and the rand is quite weak, so the price goes up. And these things are kind of outside of our control. We are subject to the market, and the market means the US dollar price of oil. What is in our control, of course, is the rate of exchange. If we run our economy properly, the rand will strengthen or remain constant. But if the economy is mismanaged, if inflation creeps in, then the rand weakens. And so with these price increases we're seeing, food, electricity, oil, this causes, it has an inflationary effect, and it causes a weakening of the rand. So in that way, we have some control over the rate of exchange by managing our economy properly. But there is a lot of demands on the economy, a lot of pressure on the economy. COVID has really hit us hard. And these things are all coming together at the same time, unfortunately. And that's where we find ourselves. We can't run away from these problems. We have to face them. But it's going to be hard for consumers because it's going to affect their disposable income. They're going to be spending more on petrol, on tax, on food, on electricity.
We'll take a break, and when we come back, we talk about copper on our domestic commodities market update. Just stay with us. On commodities market, we're looking at copper. Well, copper still remains one of the most resilient metals in very high demand due to its multiple uses. Our copper prices jumped on Monday as investors assessed the decision by Chile, the world's top exporter of the metal, to close its borders in April due to a spike in COVID-19 cases. Meanwhile, the precious metal has reached an 8-year high as at March the 31st, 2021. Well, joining me now to talk more about this is the head of treasury at financial derivatives company, Juliet Adenuga. Thank you very much, Juliet, for joining us. Good afternoon.
Thank you for having me, Chizzy. Good afternoon.
Good afternoon. Well, the price of copper has been on rise. What could be responsible for this persistent price increase in the international markets, and how sustainable is this trend?
Thank you very much. The persistent rise in copper in the market is driven to a large extent on the possibility of a rebound of the U.S. economy. In recent times, due to unexpected and below anticipated rollback of the COVID vaccine plan, in terms of vaccination, a lot have been done so far. Many people have been vaccinated, and there have been a kind of easing on the restrictions to businesses. So there's kind of more job opportunities for people. And that has impacted so much on the labor market, leading to a total trickling down effect to the copper price in the international market, especially in New York. But beyond the COVID issue, the vaccination effect is the fact that copper is becoming a very, very key metal in the world economy today because of its multiple uses, especially in relation to electricity. In terms of electrical conduction, copper is the most important, or the metal that conducts electricity most. So with the pressure to find alternative sources of fuel in place of fossils and non-fossil fuel, and the emergence and the more importance being placed on electricity, copper is definitely going to become more useful. And the price, and that is what leading to the increase. And I think it might be sustainable for a while, depending on the demand for it, how sustainable it is, this anticipation for increase in demand, alongside how effective it becomes. That will depend on how sustainable this increase can last.
According to the basic principles of economics, a rise in the price of copper should lead to a decrease in quantity demanded and a corresponding increase in the demand for its substance. What do you foresee will be the reaction to the price of copper as unemployment declines in the United States?
Presently, there is a rollout plan for infrastructure, a $2.25 trillion dollar rollout plan by the U.S. government. And that will entail a lot of maintenance and work to be done on roads, on highways, and on bridges, as well as the electric vehicle, boosting of electric vehicle. So I don't think there'll be higher demand of copper. More of copper will be needed. A lot of copper will be needed for the project to be carried out. And I don't see the price in copper affecting that demand because becoming elastic. Because when it becomes a necessity, the impact of the change price on the demand will be reduced minimally. And mind you, there are also other needs of electricity apart from construction and now becoming an alternative of fuel. So there will be a higher demand of copper. And in the near term, I don't see any change in the quantity demanded of it based on increase in price. Rather, the inelastic nature of the inelastic property is going to come by reason of its higher demand, and its necessity is going to still be for this copper to be demanded despite the price.
Now, Africa's largest copper producer is Zambia, and in spite of the current high price of copper, Zambia has defaulted on its debt obligation and is virtually in distress. How can you reconcile this 8-year high of the price of copper and the current situation in Zambia?
What is happening in Zambia is actually a case of what is obtained in most sub-Saharan African resource-rich economies. It's not just peculiar to Zambia. According to some literature in economics, a lot of literatures have been able to establish the fact that resource-abundant nations tend to perform dismally when compared to their non-resource-abundant counterparts. And this is what is just in economics, it's a malady called resource cost. it's been evident and it's been shown over time that these nations in sub-Saharan Africa, of which Zambia is one, that are rich in natural resources, tend to misappropriate the rents and the returns on these resources. A typical example is that there is bad governance as a transmission channel. There is also institutional qualities that are so poor. There is rent seeking by those in government. There is the challenge of lack of property rights and other related transmission channels through which this resource cost is passed down. Zambia is not a different case altogether. Recently, early this year, they took up the debt of Glencore, one of the Swiss mining companies in Zambia. A country with so much in terms of debt portfolio shouldn't be thinking of taking up such, but they took it up. And if you look at it properly, you see it's just like a short-term political decision against making long-term economic sense. So when leaders of resource-rich, abundant nations fail to appropriate rents, especially during windfalls, there will be no magic they will do. They will have to live with the decisions. Those suboptimal policies tend to come back to them. Presently, now that we have the case of copper going up, what will Zambia do? They're already down there. They've made decisions in the past. They've taken paths that are not beneficial. They have to grapple with what is facing them and bear with it. And that is so also applicable to other resource-rich nations. The time to begin to look at the kind of leadership, what we are doing with these resources, especially when we have windfalls, is very necessary. What are we doing in terms of socioeconomic development? What are we keeping and piling up for times of the rainy days, which are sure to come? So I don't know. The deplorable state of Zambia cannot be, we can't just do a magic. Magic cannot happen. It cannot be, put aside. They have to carry along the decisions they made in the past and bring it to bear presently. Hopefully, they'll be able to get out in such a way that they can add some values to the economy.
And maybe Nigeria would also have a lesson to learn in all of this. Anyway, thank you very much for your time, Juliet. We do appreciate it.
Thank you, ma'am. Thank you.
And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi.